all they're going to give us right now. So there's a lot of things we'd like to know, and they're a little limited in disclosure. Obviously, iPhone sales is always something we watch. This particular quarter, margins also, because we've seen some price reductions through the quarter, and I think there's be some concern on what that does with margins near term.
Tom, a lot of this quarter's earnings season has been framed with much lower expectations that have therefore managed to be beaten. Does that apply to Apple, or the run-up in the stock since its warning in January? Does that suggest otherwise?
So I think Apple's in a really good place to the extent that expectations are very low for Apple since they pre-announced the December quarter, given the challenges they had both in the iPhone and in China. So the big announcement this quarter will be how much money do they intend to return to shareholders. This is the quarter where they make that announcement. Last year was a new $100 billion repurchase program and a 16% increase in the dividend. So I think that to the extent that you see big numbers again, both in buybacks and in dividends, I think the stock will continue to perform well.
Chris, is that a market mover at this point? I guess, in other words, if it comes in the range in terms of capital return, right, will investors kind of seize upon that as the next sort of excuse to say, okay, now we can buy more?
Yeah, I don't think so. And I think the capital return program by now is pretty well known. And of course, Apple at their size, they're constrained on how much they can buy in the market. What I would say, the important thing for Apple right now is, one, as you go into the second half of the year, the concern is more about mix. How many older phones people are buying as opposed to the newer phones. And of course, our view is the phones coming out in the fall are going to be very similar to the ones from last year, so we expect a different result. But I think the other thing as you go forward with the settlement with Qualcomm is extremely important because it gives a chance as you go into 2020 for the potential for a 5G cycle. And I was pretty doubtful of that before the announcement because we had some doubts about the partnership with Intel, but that's obviously, changed at this point.
But you don't expect them to reveal the details of the deal?
No, not at all.
What kind of catalyst could that be for Apple?
5G? Well, I'm sure you've got a lot of folks on the show talking about 5G lately. It at least gives an excuse to buy a phone for next year. And I just don't see having that excuse right now unless your phone breaks or it gives the consumer something else. And I think the risk was if they weren't on board with that and they weren't partnered with Qualcomm as they are now, they might have missed that cycle and that might have been a damage to the ecosystem.
Tom, are you excited about any new products or areas in particular, Apple Card or whatever it might be?
Sure. So I think the big excitement for Apple is we're trying to figure out, what's next and how do they gravitate away from the iPhone. I think Disney showed you today a wonderful example of content done right, how well that can do with the $1.2 billion open for Avengers Endgame. So for Apple, they had the interquarter announcement on their new products, including Apple TV Plus and what you mentioned, the co-branded credit card with Goldman Sachs. But I think the important thing is to see how the company is positioning itself for the future, things they're doing, not just with payments, but also with advertising and healthcare, things of that nature. And I think that sets up the stock really well from here because expectations, I think, are very low.